Hey everyone, it's Evan here from The Trade Risk on Friday, June 9th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So we had some fireworks to finish off this week here on Friday. Started off as a pretty quiet, calm, cool, collected market, and it slowly, or very quickly, I guess, turned into something a little more violent, a little more aggressive, saw some uptick in volatility. Let's get into the charts here with the S&P 500 SPY ETF. We'll start here. Only down 37 cents on Friday. That's minus 0.15% on the day. If we go to the weekly chart, you can see slightly bigger losses, but still, basically flat. All things considered, minus 0.31%. That's 76 cents to the downside. Let's look at this week's action and let's take a look at what kind of went on here on Friday. So you can see this was a very boring sort of benign week, all things considered, until Friday. Monday, we opened up right here, slightly down, but mostly just of a choppy inside day. Tuesday, more chop sideways. Wednesday, chop sideways. Thursday, chop sideways. Friday, we had a sprout of volatility. We saw this market open up to the upside and start to break above these prior highs here, got all the way up to almost 245 in the SPY before sort of knee-jerking lower and starting to sell off into the afternoon here, all the way down into the past, into this old range again, went red on the day, and then made its way all the way down to 242, just about, or just under 242. Before finding some support and driving higher back into this range to basically end flat on the day. So really, we just had volatility to the upside and downside. We shook out, kind of both camps and maybe frustrated both longs and sellers here, and ended flat inside this range where we spent all week trading. Now, the SPY market gods did get me to bite on a short trade in here, so I am holding short via SPXS, the S&P 500, so that's the 3X levered ETF short, into the weekend. Ideally was looking for a close under 243, but that last 20 minutes of the day, they drove price back above 243 to close inside this range, so didn't get the ideal close that I would have liked, but sticking with it for now. It's just a trade, not looking for the world to end or some grand pullback. Happy to exit if we get follow through back to the upside. If we start to clear back above these recent highs, I will very gladly step aside of this trade. Now, what went on? What caused this? What was really the fuel behind this violent move? And it was the Nasdaq 100. It was high beta or high tech names, these large cap names that have had tremendous moves over the past 3 to 6 to 9 months in some of these names. These are things like Microsoft, Apple, Google, Netflix, Facebook, all of these names that have Amazon that have been just relentlessly marching higher, suddenly saw the rug get pulled out from underneath them, and we saw quite a bit of volatility in Friday's session. So this is the Nasdaq 100 down 2.5% on the day. It did finish off the lows. We were down nearly 3.5%, I think, on the lows. And there's a couple of things to sort of point out here. First thing is first, before we go any further, as I could basically end every single statement I ever make in these videos, this is very dependent on time frame, right? If you're a long-term weekly trend follower, for example, this move, while very violent here on the daily chart, if you zoom out, is not that significant at all. If you're someone that's looking at a weekly chart and following, a 20 period, 30, 40, 50 period SMA on the weekly, this again is a fairly, a benign sort of blip on the radar. However, if you are an active trader, this day means a lot, right? For you active swing traders, just like myself, this is a move that my portfolio feels as someone that trades high beta names, things tied to this index, this ETF. this is something where a 2.5% down day spills into a lot of the names that I trade my universe. So this is a big deal to sort of pay attention to and get a wake-up call from. So it all depends on time frame. But with that said, let's take a look here. A few things to point out. One, I mean, the volume is tremendous today. You have to go back all the way to 2015. If you recall back in August, this sort of, flash crash day, whatever you want to call this here, back on the 24th, if you guys recall that, that's the last time we saw volume this significant. So even the volatility that we saw, the worst start to a year in 2016, none of those days even made it up to what we saw today. So that tells us there's a lot of shakeup, lots of shares trading hands today, quite a bit of movement, rotation, or an exodus, whatever you want to call it, was occurring today. Next thing to sort of point out here is, these one-day shakeouts have sort of progressively gotten a little bit bigger. If and I'm going to sort of cherry pick these a little bit. So again, this isn't super scientific, but just take a look back here on basically the beginning of the year, end of 2016. You had this 1% drop to the downside. You had this here, 1% or 0.8% drop to the downside. You had this down here, 1.5%. You had this just recently last month, 2.5%. You had another day today, ended up being 2.5%, but was down 3.5%. So these very quick sort of one-day corrections, and in some cases we had more of a slower correction like through time here, but all of them notably have been buying opportunities, right? Every single one of these, the best course of action was to buy the next day effectively, because they were all opportunities to get involved in this trend. But as we can point out this time, the trend is even more extended than it ever has been. The volume is significantly higher than it ever has been. And this move is, again, a larger range than it ever has been. Does that mean it has to be different this time? Of course not, right? This could still be another buying opportunity, and 2 months later, we could be trading north of 150 in the Qs, right? My point here is not to, I don't have a magic crystal ball. I want to show you and give you some context and help you make more informed trading decisions to sort of look at past history to help guide your decision-making process. I know for me, a one-day move like this, I'm not interested in trying to jump in there and buy that aggressively. And, in a move like this, I mean, if anything, I'd rather be shorting it. But this, again, not my cup of tea just to short this type of move here. I'd rather just let the dust settle and see, how this all plays out. So basically, Nasdaq 100 was the cause here of a lot of the selling pressure that we saw, and there were other parts of the market that really stepped up, and we're going to talk about those a little bit later in this video. But basically, going into next week, you have to ask yourself, is the Nasdaq 100 the first leg of the stool to get chopped off before perhaps a more significant, impactful, broader market pullback, correction, whatever you want to call it? Again, I don't have a crystal ball on it, but it's something that a day like today certainly gets my notice. And even looking at the S&P 500, this day here with this kind of poke up and then failure, it's minor at this point. Trends are higher, but it's something to notice. Again, uptick in volume here in the SPY. You could go to the weekly charts. You could say, okay, we kind of did that whole look up, tried to push higher, failed, and then kind of came back into the old range. As always, you're going to hear these things need confirmation, which I don't necessarily disagree with, but S&P 500, back to this here, you could see basically trend remains higher. We're above 240. Longer term holders probably not caring about this at all, just because it's not significant enough. But for you short-term traders, you should be noting this uptick in volatility, and perhaps acting on it, tightening up stops, reducing longs if that's part of your plan. And I think next week, seeing on how it resolves this immediate range, I think really this low and high of today set some pretty good upper and lower bounds heading into the future. If we start to take out 242 to the downside, if we, hell, even if we start to resolve 243 to the downside, that's going to be your first kind of your first kind of line of caution if today was not enough for you. And then on the upside, if we can start to just ignore the rest of this and this happened to be a good shakeout in both directions and we continue higher, then so be it. That's been the motto of this market for quite a while now. So that's the S&P 500. Again, trend remains higher. Volatility, though, getting a bit of an uptick. High beta land, which has been traditionally the leadership, has been suffered certainly a good amount of damage here today. And the IWM is what is actually perking up and acting well now. So careful what we wish for. This is something we talked about in our last video, saying we really want to see the IWM start to stabilize and participate to the upside, get above 140, get a strong close, and we got it. But we got it at the cost of losing the Nasdaq 100. So can the IWM now start to do the heavy lifting? Well, we've seen it happen before with the Nasdaq, so it's conceivable that the Russell 2000, maybe financials and energy, which have started to see some reversals here on Friday as well, could start to be the new leadership group going into the future. So that's something we're going to pay attention to. But again, let's not belittle all-time closing highs here in the Russell 2000 on the daily chart, on the weekly chart. Going back to the daily here, you can see big tail on the top end here, so it didn't close quite too strongly, but it did certainly outperform today and managed to close green, up 0.5%. So I think that's a good spot to sort of wrap up the market environment. Essentially we got complete role reversal between the IWM and the Nasdaq 100, right? We got the Nasdaq, which is now pulling back. We got the Russell 2000, which is now trying to step up and lead. Will the Nasdaq suffer a bigger pullback? Does it turn into something else? Does it start to spill over to other parts of the market? That's something we'll watch next week. Russell 2000, can it hold up? Can it continue to lead? Can it hold up above 140 and start to pick up some of this slack? That's what we want to pay attention to next week as well. And then for the S&P 500, that's kind of the middle ground. We got that range that we've defined, basically the lows and highs of Friday session. What happens with that? Let's watch those bounds and basically adjust accordingly depending on your time frame and strategy. So that is the market environment. Let's start to get into some other things out here. So TLT, let's go here next. So this is bonds. So pulling back on the week overall, if we go to the weekly chart first, you can see we're down minus 97 basis points. That's minus 1.22 points, or almost 1% here in TLT on the week. We started off kind of juggling around the highs from last week, and then we eventually sort of rolled over here into the latter part. Now, we did pick up a position in this on Friday, so we are long TLT at this point. We've got some trades in here recently. Our last trade was kind of right around this level. I think as we started to break out on the 30th, we picked up some TLT, or TMF, the levered ETF, and we were lucky enough to kind of sell it off into this pop, or the majority of it, and then into these highs. And now that it's kind of back into this rising 20 period, we established another position here on Friday. So we're long it. Again, I like this trend. I'm going to continue to look to buy dips here, so long as we're above 123, this 20 period moving average. I do like it. Again, this big base, I've basically been saying as long as we stay above it, as long as we're trying to trend higher, I like it for more upside. So again, could be completely wrong. The stop is in place, but that is a trade that we have on as of Friday. Next, if we go to GLD, kind of the same thing here. Had this early pop higher to start the week, and then a pullback. If you go to the weekly chart here, you can see we kind of had this push up and failure, close on the lows. Not the prettiest looking bullish candle here, or not the prettiest looking candle for the bulls. You can see we retested the highs from April, so to speak, kind of failed and then closed on the lows. So the trend 8 and 20 period still bullishly aligned. You can see we're just testing the 20 period now. I still like GLD to the long side if I were to have a position here, or if I were to be trading it. It's not compelling enough for me, so I'm just kind of watching this and being a spectator. If we start to lose any more ground here below 120, then certainly it just gets pretty messy, all things considered. But see if the bulls can kind of step in right at this kind of critical 20 period. If it can't, then you may have be able to lean on that on the short side. Silver is basically the same comments, just a little bit messier. This weekly chart, very flat 8 and 20 period in the middle of this bigger range here. So really just isn't compelling to me one way or the other. I'm just kind of avoiding it. USO getting a little bit of a snapback here, or a little bit of some positive territory, I should say, to finish off the week, up 64 basis points on Friday, to finish Friday up 64 basis points. But on the week, you could see it's down nearly 4% and undercutting the lows from May and the year-to-date lows. So we are at year-to-date lows here in oil. That's a bit of a concern, although, well, as we get to the energy stocks later, you can see they're starting to perk up a little bit more ahead of USO, which is slightly interesting, but still very vulnerable here. You've got this series of lower lows, lower highs. You could say it's maybe losing a little bit of momentum here, but again, still doesn't look too compelling to me for the long side at this point, so I would be avoiding it. Natural gas, we talked about the lows here at 650 to potentially get re-challenged and retested. So far, it looks like it's trying to balance out here towards the end of the week, but again, still looks in a very vulnerable position, bearishly aligned 8 and 20 period. I would not want to be a hero here looking for longs at this point. That's my personal preference. So that, I think, covers the major markets. Let's look at some of the sector analysis here. So basically, what we had break on Friday here was XLK. This has been the strong leader. Take a look at the volume. Take a look at the break of trend below the 20 period, taking out the past 2 weeks or so, 2 weeks plus of trading. So XLK, be interesting to see, do we get follow through Monday? Is this a viable dip? These are kind of the same thought process and comments we had about the Nasdaq 100. They trade pretty similar. Also, semiconductors, even louder of a reversal here. Huge volume, engulfing, engulfing 7, 8, 9 days of trading with this bar here. Again, tremendously loud and big range bar, and still above the 20 period, and it was a 4% drop. So it tells you just how how strong this trend has been. And if we were to use this channel that I have drawn here, you can see we did accelerate higher from it mid to late March. Maybe that was an acceleration blow off, if you will. Again, I'm not going to get too technical about it, and I'm not going to read any more into it than, do we get follow through next week? That's what I'll be watching. Or does this just become a spot where dip buyers take a step in here? So SMH, XLK, you could throw XLY in there, which coming off just a little bit here, uptick in volume as well. Not a different look than XLK. Hasn't been a clear kind of runaway straight line uptrend here. This has been kind of moving higher with more ebbs and flows, but you can see just suffering a little bit more of some volatility there on Friday as well. But on the upside, right, you have these three that really kind of got the wind knocked out of them. Then you have materials, which completely unfazed on the day here on Friday, up 1.28%, emerging from this range that it was in since February, and just really looking technically beautiful there for new highs in XLB. Financials, right? We talked about this in our midweek video. We said, look, this is the range. This is a potentially vulnerable range that it's been in. You get this clear kind of head and shoulders pattern that everybody's eyeing, but do we invalidate it to the upside, get above 23.75, 24, or do we end up rolling over and taking out that neckline at 23? We talked about that on Wednesday when we were kind of just settled in the middle of this range, and you can see it did accelerate higher, uptick in volume, strong close on the day. If we go to the weekly chart, you can see taking out and making a new closing high going back to March of this year. So XLF, if this holds, which, so far so good, as long as this doesn't prove to be one gigantic fake out, if we came in on Monday with a gap down and quickly fall back into this range, that would be very troublesome for the financials. But again, that's all speculation. So far so good for financials. And then XLE, sort of as discussed there, this is outperforming pretty significantly here on Friday. I don't know what other news was out, didn't read too much into this sector at all, but oil, we did see it stabilize, but still looks pretty vulnerable, just kind of barely eking out 0.5% gain. But you could see XLE almost 2.5% to the upside, taking out all these recent highs. So that's slightly interesting there, just to see if this is finally ready to bottom. Again, it still has plenty of work cut out for it. I think if you were to just simply draw this trend line here, it's something to pay attention attention to, which really, you know, I would use this trend line and then this horizontal level. And again, I think I talked about 69 quite a bit in prior weeks videos, but I think if you really want confirmation, if you really want to see XLE start to prove itself, take out resistance in kind of a dual line fashion above $69, you'd have plenty of time to potentially capture a rotation back into this group if it were to happen, instead of playing around in some of this noise. So just a longer term perspective there. I do note that it is interesting of the outperformance here on Friday, but again, it could be in a pretty noisy area. So again, I would just be watching it and being a spectator at this point. So that's the recap for this week. Went on a lot of different rants there. Hopefully you guys had a good week trading. Thanks so much for watching. If you're new here, do subscribe if you like these videos. Try and post several times a week along with some other types of videos. So thank you so much for watching, and talk to you again soon.